Welcome to episode 59 of The 5-Minute Investor, the podcast where we break down stocks at the heart of two stories shaping your investing week. I'm Trevor Abbas.
And I'm Jonathan Brown. Each week, we bring one stock, one headline, and one reason investors should care.
This week, with Brent crude oil hitting a wartime high of $125 US per barrel on Thursday, reflecting investor concerns about rising inflation, as well as reports that the US is considering additional attacks on Iran, the questions of the moment are: how are investors reallocating capital in the oil and gas space away from the Middle East? And which stocks offer the clearest paths to potentially benefit? John starts us off with an oil stock in the midst of streamlining a rebound strategy to narrow losses and grow its overseas reserves.
Every oil spike forces investors to ask the same questions. Who benefits the most if these prices stick? Today we're looking first at TAG Oil, ticker TAO on the TSXV Venture Exchange, a small cap name that could feel an outsized impact from oil holding wartime highs.
You've covered this company in the past, John. What's the investment case here?
So TAG Oil, market cap 25 million Canadian dollars, trades around 9 cents since February, is worth investigating because its small size gives it an asymmetric upside. Sustained high oil prices can significantly re-rate the entire company, not just improve its margins. When oil hits these wartime highs, these lightly followed high leverage names are often where the most dramatic market repricing happens.
Let's talk performance. How has the stock managed under current market volatility?
Well, after a tough year that reset expectations, TAG Oil is beginning to show early signs of some momentum, rising almost 6% as the market looks ahead rather than backwards since the year began. Now, while the stock is down about 35% year over year as of this recording, it started to turn a bit higher as investors reassess the company with a stronger liquidity and higher oil prices that are now in play. The stock reflects last year's challenges, not this year's setup.
And what have you learned from the company about this year's setup?
Well, late last week, TAG Oil reported steady Egypt production averaging around 84 barrels a day from 2025 from two wells, generating 1.4 million Canadian dollars in revenue while narrowing its net loss year over year, and then ending the year with 2.5 million Canadian in cash after strengthening its balance sheet through asset sales. So after year end, the company raised 11.5 million Canadian dollars in February 2026, extending its runway to drill additional wells and advance appraisal and development work across its Egyptian concessions.
My oil stock that's oriented towards the upside, given the war in Iran, is PetroTal, the largest crude oil producer in Peru, whose market cap sits around $500 million Canadian at the time of recording.
So why is a Peruvian oil company a worthwhile prospect given this disrupted Middle Eastern supply?
This is because Peru, like many Latin American countries, is a net importer of oil, meaning that it's currently contending with higher electricity and transportation costs and inflation in general, shining a light on domestic producers capable of producing fuel at comparatively lower costs. PetroTal's sale prices average approximately $90 US per barrel in March 2026. That's about $1.38 below WTI and a full $13.13 below Brent crude averages for the month.
Now, in terms of the strength of PetroTal's business, what should our very savvy listeners know?
From the broadest perspective, the company's 100% owned flagship asset, Bretaña Norte oil field in Peru's Block 95, began production in 2018 and has yielded more than 31 million barrels to date. Homing in a little more, we see that production has grown from 4,131 barrels of oil per day in 2019 to 19,473 barrels in 2025, while growing proven and probable reserves from 38 million barrels to 110 million barrels, which are currently valued at about $1.16 billion US after tax. This is more than twice the company's market cap. That said, net income has been falling over the past few years, decreasing from $188.5 million in 2022 to $44.18 million in 2025, indicating a focus on growth at the expense of profitability.
Now, has the company put measures in place to ramp up profitability moving forward?
It definitely has, opting to reduce production to an estimated 12,000 barrels of oil per day in 2026, freeing up resources and enabling numerous operational reinforcements expected to yield a 20 to 25% reduction in operating and G&A expenses, heralding a return to form in 2027. Key moves include shifting to a third-party drilling provider to increase work program reliability, deferring non-essential infrastructure spend, and suspending its dividend, all of which will allow for a $80 to $90 million capital program, including 2 development wells at Britannia, which are expected to lay a path back to 20,000 barrels of oil per day. Backed by a leadership team full of oil and gas heavy hitters, PetroTal is in good hands to deliver on its near-term goals, improve its income statements, and maximize long-term upside, which should, as I see it, drum up investor enthusiasm in the currently sky-high price environment.
I'm ever the realist, and I gotta know, just how has a PetroTal stock matched up to the rosy picture you've painted for us today?
Well, in my estimation, there's a clear dislocation between shares and the underlying company's near-term potential, with investors shouldering about an 8.5% loss year over year, largely reflecting the suspended dividend and planned drop in production. Given PetroTal's past operational success, it's reasonable to suppose that this loss is really more about income investors clearing out than a deterioration in company fundamentals. Consequently, it should only increase the upside entailed by leadership's plan to shift focus from production growth to liquidity, making the stock a more attractive buy in anticipation of improving financials over the year to come.
As always, you can find links to the articles from today's episode in the show notes, and more investing insights on stockhouse.com.
And you can find the 5-Minute Investor on Spotify, YouTube, iHeartRadio, Stockhouse, or wherever finer podcasts are found. This podcast is produced in partnership with TAG Oil Ltd and PetroTal Corp and is intended for informational purposes only. For full disclaimer information, please visit stockhouse.com/legal/disclaimer.